Is the dream of homeownership dead? What's going on, guys? Mike here again. And I was watching this piece on CNN the other day that talked about the affordability crisis and whether or not people who want to buy homes will be able to afford homes anymore with inflation, with the price of homes, with the interest rate being where it is. And I want to do a review video where we watch the video together and I answer some of the questions because you guys already know how I feel. Homeownership is one of the best pathways to the middle class, to building wealth. And no, all right, I'm not even going to let you wait to watch the rest of the video. You already know the answer coming from me. In my humble opinion, it is not dead. Is it more expensive? Yes, it is more expensive. It takes a little bit more discipline. It takes a little bit more grit to get into a home, but the dream of home ownership is not dead. Let's watch the video.
For many renters, the American dream is fading. For a long time, owning a home was seen as one of the best paths to middle-class prosperity and to building generational wealth. But a new poll shows that many renters think buying a home these days is simply out of reach. CNN's Matt Egan has the troubling numbers for us. And Matt, when we talk about the numbers behind the economy being sound and this being a great economy, a lot of people don't feel that way, and it's because of this.
Yeah, that's right, exactly, Boris. This American dream of home ownership, it does feel out of reach for far too many people. They want to buy, but they feel like they can't because mortgage rates are high and home prices are even higher. And so some of them, they're throwing in the towel, they're walking away. So this brand new CNN poll shows that 86% of renters say they would like to buy a home, but they just can't. 86%. Only 13% say they could buy a home, but they're just choosing not to. Now, if you dig in a little bit further, we can see that among the people who say they can't afford it right now, only 46% think that eventually they'll be able to. Most of them, 54%, say that that is not likely. So this really does speak to some pessimism on this front and really a sense of hopelessness among renters. This is a concern when you talk about the economy because, listen, as you mentioned, home ownership, that is the ticket to building wealth in America. And so this housing affordability crisis, it's actually widening the gap between haves and have-nots, right? Homeowners, their net worth is going up as home prices go higher and higher. Everyone else, though, they're on the outside looking in.
If you're enjoying this content, guys, don't forget to like, share, and subscribe. Share this with someone you think might find it useful. If you're a homeowner, you're on the train to being upwardly mobile and being able to buy that bigger home, that nicer home, selling your kids to college, opening a business, whatever it is that you may want to do. And if you're renting, you're missing the train, right? And this is the key that I want people to remember, because those folks who have the ability to purchase a home but decide that they're not going to, what's the alternative? Well, what's the alternative? It's renting. Right? You're spending $2,500 a month, $3,000 a month, $35,000. I just did a rental deal the other day for a family who's renting a 3-bedroom home here in West Palm Beach, and they're spending $3,300 per month. That's a mortgage, guys. $3,000 a month, $3,500 a month, that's a mortgage. You could own your own home for that amount per month. And let's multiply 3,500 times 12, $40,000. Okay? That's too much money to be spending on a rental when you could own your own home and take advantage of the appreciation and build equity for yourself and your family. Let's keep watching.
And Matt, what are some of the obstacles keeping people out?
Well, one obstacle is the mortgages. 17% of people who can't afford to buy right now, they said that their inability to qualify for a mortgage is the biggest issue. We also saw about 1 in 3, 31% say the biggest problem for them is interest rates. Now, there is good news on that front because a year ago, mortgage rates were almost at 8%, Now they're below 7%, and they could go lower, especially if the Federal Reserve signals later this week that they're prepared to start lowering interest rates. But the number one obstacle is the down payment. 40% said that that is the biggest barrier for them. Remember, the median home in the U.S. is selling for more than $400,000. So even if you're just putting down 10%, that means you need $40,000 for the down payment, plus another $10,000 for closing costs.
All right, I want to stop there because he said a lot that I want to talk to you guys about. Let's first of all start with the interest rate. Interest rates are a little higher than where they were 3 years ago. Interest rates were in the 2s, 3%. But listen, even now at 6%, 6.5%, historically, that is still not a bad interest rate, guys. Don't let the media tell you that 6% or 6.5% is a horrible interest rate. Yeah, compared to where it was back in 2020, but historically, interest rates are where they are. Actually, they're lower than where they've been historically. The other thing he said was putting 10% down. Most folks who use an FHA loan only need 3.5% down. And even the folks who go conventional only need 5% down to purchase a house. So on a $400,000 house, that's only $20,000 down, right? Yes, you do need your closing costs, but if you work with me to get your mortgage and go with us here at Cashback Realty, chances are we're gonna be able to get the seller to help you with closing costs. So that whole myth that you need 10%, 20% down to purchase a house, that alone is preventing so many people from purchasing homes. People who qualify to buy a house, who could buy a house, it's preventing them because they believe that if they don't have that amount of money, they cannot buy a house, and nothing could be further from the truth, guys. An FHA loan, you only need 3.5% down to purchase a house. And there are even some conventional loans that you can purchase with only 3% out of pocket. And it's important to know this. Why? Because home prices are going one way, guys, up, right? So I don't want you to miss the train of appreciation, building equity in a home. Remember, year over year, homes are appreciating at anywhere between 3 and 8%. In the last few years, it's been a lot more than that. However, if you decide you're not gonna buy a house because you don't have as much down payment as you think you may need, you miss out on the opportunity to own a home and build equity. Let's keep watching.
I spoke to a father of twins outside of Atlanta. He's 40 years old, and he told me that he was just dismayed at how expensive homes are right now. He said, I'm not going to pay $350,000 for a rundown house. I'm not going to play your game anymore. I'm done. He said that this has taken an emotional toll on him because he felt like a failure as a husband and as a father. So listen, Boris, hopefully mortgage rates come down and home prices calm down, because it is very tough out there right now for first-time home buyers.
And I understand this father's frustration. The guy they referenced here, Jeremy Anderson, I get it. However, I want to say this to you. If I'm ever lucky enough for you to come across my video, don't become so discouraged that you think you cannot purchase a home, because your first home does not have to be your dream home. Your first home, especially if you have a family like this gentleman, your first home does not have to be the home that you retire in, that is the beautiful shining home on a hill. What you're trying to do is catch the train. I know I keep using that reference, but I'm using that analogy because it's like missing a train versus catching a train, right? And if you notice, the gentleman said, I'm not playing your game anymore, because he feels like, you know, a $350,000 home or a $300,000 home should be his dream home. And unfortunately, home prices keep going up, right? Home prices don't go down, they go up. So what do you need to do? And I mentioned this in one of my other videos. I'll put a link to it up here. What you need to do is get your foot in the door, right? It's like a ladder, right? You buy one house, then you get the equity from that house, and you buy another house if you want to do a rental property, or if you just want to sell that, cash out, buy another house that's bigger and more suitable, more to your liking. get your first step. Your first step does not have to be the home you fall in love with. Your first step doesn't have to be your dream home, right? And Jeremy, if you're listening, buy a house. Buy any house. That's better than what you're doing now, which I'm assuming is renting, right? People talk about the interest rate. Interest rates are too high. Well, what's the interest rate when you're renting? What's the interest rate when you're renting? Right? And that's a rhetorical question, right? Because the interest rate is 100%. You're not paying interest when you rent, obviously. But I say that to make the point that none of what you are paying for when you rent goes towards equity. None of it goes towards your home, right? Property that you own. Everything, every dollar of that $2,000, that $3,000, that $3,500 rent you pay goes in your landlord's pocket. All right? And that's what I mean when I say when you rent, your interest rate is 100% because all of it is going towards your landlord's interest versus when you purchase a home, your interest rate maybe 6%, maybe 6.5%, depending on your credit, etc. Thanks for watching this video, guys. If you enjoyed the content, if you have something you want to add, leave a comment down below. I'll talk to you soon.